What's up, guys? Welcome to Market Cycle University. This is going to be my very first video on the channel, and I'm going to take this from a very starting level when it comes to my first couple uploads on the channel, because obviously this channel is going to be centered around day trading education. So I'm hoping that if you're someone who clicked on this video, you are very interested in learning the skill of day trading and everything it entails of, because trust me, doing this for the last 4 or 5 years of my life, it's a very long, tedious, stressful, painful progression of learning this skill. But your willingness and dedication to commit to learning not only this skill but any skill will be a direct reflection on how well you'll actually do and how far you'll actually make it. So with all that being said, let's get right into the very first video. The first couple videos are going to be very simple. It's just going to be around candlestick anatomy. If you're wanting to become a day trader, you're going to be looking at these things we call candlesticks every single day of your life, and you're going to realize how stressful and how confusing and how maybe annoying and painful these candlesticks will actually be for you at some point in your day trading journey. But all in all, if you're here, it's because you love the candlesticks and you love what they represent. And I guess at some level that you can extract money from the markets. And maybe you've even seen other people do it, which is why you clicked on this video. And the goal for yourself as of right now in your life is learning how to do it for yourself. So with all that being said, let's get into it. We're going to talk about candlestick basics. And in day trading, there is only 2 types of candlesticks. There's one that, let me just grab a paint thing here. There's one that's green, and then there's one that is red. And please ignore, okay, we got that fully red. Okay, so the market is always going to move up or down, and that is usually showcased between green and red. Now keep in mind, these colors can literally be anything. It does not matter. You can choose the colors of your chart. I specifically chose white and black because, like I said, you want something that's not going to be confusing and stressful and painful the farther you get into this journey, and you just want something that's clean and easy to look at. So a lot of people use kind of, I don't know what these colors would be called, but not bright colors that kind of attract attention. So we have 2 candlesticks here. We have a green and a red one. One is going to represent price going up, and then the other one is going to represent price going down. Okay, so price moves up, meaning if you have 1 share of Apple and that 1 share of Apple grows from $1 to $5, price actually increased by $4. But if you have a stock of, say, Apple, and it's at $5 and it goes all the way down to $1, then it decreased by $4, meaning that this would be a loss and this would be a gain, right? So if you've ever kind of dabbled in the world of investing, you've probably heard the terms bullish and bearish. Well, simply a green candle is bullish, and then a red candle is bearish, right? So oftentimes when people invest in something, they want to buy. Most people, buy gold, buy silver, buy the market, stick it in a retirement plan, and just hoping for a gain of X percentage. No one really sells the market. But as you get further into it, you're going to realize you can also make money selling the market, just like you can buying the market. We call that shorting, but that's not really too important for you right now. But essentially, when we look at these examples here, let me draw like a little chart on the right side of each candle here. So bullish, like I said, starts lower, and then 1, 2, 3, 4, 5, 6 ends higher. So price starts at $6 on a bearish candle, and it ends all the way down at, say, $0. Lost money, gained money. Pretty simple. Now, there's a couple different parts of a candlestick. One being the wicks, oftentimes you'll see that they have these weird lines at the tops and bottoms of them. We're not going to get into that right now, but you're going to understand that price has an open. So this is the open of a bullish candle, and then this is the close of a bullish candle. Close, right? Now on the other end of things, price actually opens at the top on a bearish candle. Open. And then, oops, it closes at the bottom. So close. And sorry that line's not straight. I really don't feel like fixing it, but you get the point. So open, close. Now, back to what I was previously saying, for a price to end off green, it has to close higher than what it opened at. So if, say, you know, it opens at a price of $10, closes at a price of $15, price went up. Opens at a price of $30, but it closes at $2, price went down. Very, very simple concepts to actually understand, but if you're a beginner and all you see is this, you have no idea what the heck you're looking at. So to make this simple for you guys, I'm going to make my candles the same color as the candles that I was just showing you guys. That way you guys can see this on a real life chart. And I'll showcase here. So you'll see the price is actually over here. Whenever I hover over it, just follow the line. And you'll see that this line corresponds with, we'll round it, we'll just stick with round numbers to make it simple, $130. So this is the first bullish candle we're going to focus on. It closes at $147. See, so open 129, closed at 147. Because you have to remember, the candlestick is always going to end with a close and start with an open. Those are two parts of a candlestick that will always be there, right? So let's take a rectangle. I'm going to focus on these three bullish candles. So this candle closed at 146. This next candle opens up at 146. It then closes at 169, right? Because it's going to close higher than what it started if it's going to be a bullish candle or a green candle. But like I said, this candle can also be yellow, blue, pink. It just matters about where price opened and where price closed, and if it actually had an increase in price, because candlesticks represent the movement in price. And at this point in time, these three candles, the movement of price is going up. Okay, so let's look at the third candle, 169. It closes at, and then it opens at 193. So 193, or sorry, it closes at 193. 193 is the very top, and then 129 was the very bottom. So let's put 129 right there. So price over these three candles, price increased on every single candle. Now price didn't have to increase after this candle right here. After the first candle, price could have formed a bearish candle, but it didn't. You don't have to worry about that right now. That's a little bit more advanced. You'll start to realize very easily that the price is going to represent and make the candle, and in this instance price was increasing, which is why it made bullish candles. Okay, that's all you need to know. Bullish, bullish, bullish. Oh, this candle's red. So what does that mean? It means price on that candlestick actually decreased. It ended off lower than where it started, right? So let me delete these lines here. I'm going to delete all of them. Okay, maybe this is a little bit easier. Boom, boom, boom. Let's focus on these two bearish candles. Okay, so price, it's going to open at the top for a bearish candle, right? Because bearish, price moves down, price decreases, right? Gets lower. It's going to open higher and close lower. Okay, so this case, price opens at 193, closes at 187, right? Follow the line. 187 at the bottom, and then 193 at the top. Decrease in price, it's a red candle. It's bearish. Price is moving down. This next candle opens at 190, $190. It's this middle line here. I'll make it a different color so you can kind of see. Just blue. And then it closes at 170, right? 170. So there was a bigger decrease in price on this candle than there was in this candle. You'll notice all these candles here, they're different sizes. So if one's much bigger than, you know, the previous one, like say right here, this green candle with this red candle, I'll actually use this to showcase. This green candle is way bigger than this red candle. Oh, so price must have moved. It must have moved a higher or larger amount, or, you know, expanded through a larger area than this previous candle. Because this candle from the open, which is the top part, was 152, and then the close was 149, as seen on the right side there, right hand side of my screen, 149, match it up. But on the green candle, the bullish candle, is 147, and then it jumps all the way up to 182, 181, oh sorry, 177, something in there, right? That's a big jump, which is why this candle is much bigger than the candle before it. But as of right now, all you need to know is that green is bullish, price opened lower, closed higher, and then red is bearish, price opened higher, closed lower. Okay, very simple first video. If you enjoyed or learned anything from this video or have any other questions, just throw them down below. These videos are definitely going to start getting better as I, you know, start getting more comfortable teaching, and kind of as the concepts kind of, you know, come into fruition, and I can, you know, teach in a certain way that I can't right now because I'm not too much far into it. But stay along, these videos will keep improving, and then your trading will also keep improving as well. Thanks. Bye.